Welcome to the Dividend Talk podcast, episode 56, quarter two portfolio review. Hey guys, welcome back to another episode of Dividend Talk. I'm your co-host, Engineer My Freedom, and today I'm joined with European DGI. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavour. If you're new to this channel, please hit the like button and subscribe to us, and check out our previous episodes on YouTube and Spotify. See you on the inside. Hey buddy, I'm back. Did you miss me?
Yes, of course, of course. I really miss our Friday evenings together. So it's almost like we're having a bromance. So yeah, it's really good to have you back, EMF.
Yeah, I have to say I was really looking forward to this week, but Phil and the Client Capitalist did an amazing job, the two of them. I mean, for both where it's not their natural language per se, they came across really well and did two really good podcasts. And I got some nice stocks to look at from last week's show, some stocks that I've never even heard of. But Avast, I think, was one that really interested me and looks good. And just I was listening to it on my laptop at the time, and a pop-up came up from Avast on my pop-up. It was like coincidence, like buy me. So no,
Yeah.
two really good podcasts, but I have to say I'm glad to be back.
Yeah, well, they were well prepared, did a good job. It was also for me really nice to talk with Phil a bit deeper about Fresenius. It's a company in Germany, of course, that many people have their interest in. So we went a little bit deeper, but also the Kleine Kapitalist is really like a walking catalog about European dividend stocks. It's unbelievable. We did just 7, but he could have easily done 20 to 30. It's really amazing.
And I think it's a good time actually, because we have such a vast knowledge within our community, and we know we've a tight community in this Dividend Day group, where we're starting the European Investor Network, where we're all coming together to share our knowledge, our vast amount of knowledge in different areas. And I'm quite excited to say that we're launching this blog, this network next week, and we're going to see some top quality content, I feel, from a lot of investors.
Yeah, definitely. I hope it really could become one place for many people to go to, and hopefully we can, how you say it, also make some breakthroughs in some areas regarding data quality and such. I would really hope that, of course, in the beginning we will use this lean startup approach, so it will be rapidly building up, but then over time I hope we can really bring some good features to it and then some unique quality of information to it.
Yeah, so stay tuned for that. But in the last week, has there been anything that caught your eye?
Yeah, definitely. I mean, for instance, what was really interesting for me was that the Department of Defense in the United States canceled the contract that it had with Microsoft, this 10 billion contract that also became a lot of lawsuits together with Amazon. I found it interesting. What I really like is, again, this Satya Nadella, how he spoke about it, about this contract and such. And I must have hurt them a little bit, but at the same time, he's not, he's not fighting over it. And personally, when I was reflecting on this, like, I thought really like, which idiot tries to make a 10 billion marriage with a single company? Because if you think about it, you lose all the flexibility. Of course, I believe a lot in Microsoft's power, but if you think about the solutions that you need, why do you need to go in bed with one vendor? You can take 2 or 3. You get the power of Azure, the power of AWS, maybe the power of the Google Cloud, whatever you need. They have different services, a different maturity. So it makes much more sense to have a broader tender than just go in bed. Of course, as a Microsoft shareholder, I wish they were the only one. Yeah.
Yeah, but you have Apple as well, and Apple were probably the main. Oh no, it was Amazon. Was it Amazon?
Amazon.
Were Amazon? Sorry, yeah, Amazon were competing against them. So I mean, I don't know if this was because Trump administration had gave it to one company and Biden is just like, we're not having this and we're breaking it up, or if it was, like you said, more logical thinking. Um, but I believe the contract was it over 10 years? It was 10 billion over a period of
Yeah.
time. So it wasn't a huge amount every year. So it's not going to affect our cash flow too much. It was more about the prestige of having this contract, I think. So
Yeah.
I
But
think it,
just think
yeah.
about it when you're the head of the Department of Defense, and you're going to sign a contract for 10 years with a vendor, 10 years in IT. Yeah, think about it. In 2030, where the technology will be, you don't want to be in bed with a single vendor. Really not. You need to bet on multiple horses. I understand that they want to, that they think about, how is it, saving money on a contract, but I think there's a little bit of utopia to it as well.
I think this is a little bit more than saving money. You could imagine. I remember reading an article, and I had these companies that they're looking for have to be able to top secret, and no secret was one of the top words that was used. The more companies you have, the more people are exposed to your plans, and the more chance that has of leaking and so on. So I'd say there is a little bit of element. Okay, from a technology point of view, yes, we should divvy it out. But if you want to keep something secret, the less people that know, the better, and that might
Yeah,
that might play into it a little bit.
maybe they shouldn't have secrets in America.
that's
Maybe
another
that,
discussion.
yeah, maybe that's the problem of all the shit we have in the world.
Let's just be open.
Yeah, exactly. How about you? Did you? I mean, you had some time to think and to read the news, I guess. So, anything that came to your attention?
Yes, something this week was with charging network points for trucks, which is quite unique. And one of the companies that sprung to my mind was Volvo, because we hear a lot about Volkswagen, with Tesla, and all these companies, but Volvo have been around a long time. I see them on the roads all the time. So when I saw Volvo were involved, it kind of just made me look at it and go, oh, I've never looked at them like that before. So it's nice to see them coming in and merging. I think they're merging with three other companies to distribute network points for trucks. Now, I don't know how successful that's going to be. It's quite unique. We're going to have network points anyway, so I don't know what's going to be so unique about just having network points for trucks and that. But I think it's a sign of what's happening. I mean, we do have lots of cars and stuff starting to come in, but we don't really talk about electric trucks for long journeys because we don't have that infrastructure in place. So it'll be interesting to see how that progresses. But it's something that sprung to my mind.
Hmm. Nice one. Yeah, it will be really interesting to see, right? This whole EV theme that is also in the investment community really popular. I sometimes feel it's a bit overhyped, but from the other side, if you then see General Motors and such with their investments and everything, I really, and Volkswagen, I really think like, the old car manufacturers are coming back. Yeah, it's they woke up and
Yes.
they are full into it now.
Ford looks like it's coming back as well, and that's another
Yeah.
one. I I, I was looking at. They've spiked a little bit in price, but they're certainly making comeback. So hey, we might have some
Yeah.
comeback kids.
Well, talking about comeback kits, have you read the press release from Shell this week?
I haven't. I saw some things on Twitter, but I haven't read.
So, I put a tweet the other day like $80 oil is the new $100. Yeah, and my philosophy here is that if they lowered the cost per barrel, let's say from $55 or $60 to $40, then we shouldn't think about anymore at $100 with massive cash flows, but at $80. And not even few days later, Shell comes with a press release saying like that they have massive cash flows and that they are going to increase total shareholder distributions to within the range of 20 to 30% of their free cash flow, let's say CFFO. And for me, this is really interesting because it's so clear that at this oil price, if they are geared to really low cost of oil, they have also still their capex investments relatively low compared to what it was before. this must be a massive quarter, right? And
Yeah.
from a cash flow point of view, I hope they use it a little bit to clean up the balance sheet, and they say that as well, right? They also want to strengthen their balance sheet and looking for AA credit metrics. So I expect that they will reintroduce a strong buyback program again. I'm not sure whether they want to hike their dividend too much to straight away lose flexibility, but I'm actually hoping. I mean, sometimes we do predictions here. I'm hoping that they will hike it by 10% or something like that, the dividend. And for me, this is a comeback kit, Shell, but also oil in general.
What strikes me, and I'm reading a snippet of it here, is that Shell will retire its net debt milestone of 65 billion. Does that mean they've reached that?
For me, I was reading this as well. I am not 100% sure because I don't know if they are retiring the milestone, that the milestone is not relevant anymore for them, or that they really have paid it back. I think their British gas, was it at the time, cost around 65 billion as well, and I remember that they wanted to use future cash flow to pay all this debt again back, and
Yeah.
this is now 5 years down the road. I don't know. I will really need to read the quarterly report. I think it's in the end of July. But even though, it's not just oil flowing out of the ground now. It's literally all the cash that they can't catch anymore. So it's really good, and it's also about time that Shell and oil gets a little bit of a positivity in their cash flows again.
Yeah. I mean, I'm just checking the price there of them. They could shoot up if they have a really strong earnings. It might be a nice time to buy them, particularly after this press release. You might see a little rise going into earnings anyway. But I'm so happy. I'm so happy that I bought them when I did. I really am.
Yeah, exactly. And it's heavy cyclical, right? So only a little thing needs to happen, and this whole oil price can collapse again.
Yeah.
So, but it's nice after 1.5 year of rubbish in the oil industry to have something positive again. So I'll see
Yeah.
it. I'll treat it a bit like that.
Yeah. Yeah. Hey, and remember, we still don't have travel fully opened. We still
Exactly.
that's so there's still some room. But
Yeah.
okay. So let's move on to our main topic where we'll talk a little bit about our portfolios. Have how have you done over the last quarter or even half a year?
Quarter.
Hmm.
Yeah, this is really interesting. I'm not actually when I did the analysis the other day, I was actually not so happy with it. I had again a feeling that I'm under investing a little bit. This is probably to do with the fact that the market feels so expensive. It's a bit harder to find companies that I really want to commit to. There are often some companies that look nice, but when I go deeper into it, I feel like, do I really want to have a strong position in this? So if you look at it from that point of view, my portfolio did quite well. If you think about, let's take the one that interests me the least, and that's the value of the portfolio and how it grew. So compared to last quarter, it grew with almost 8%. So not bad, I think. Some of this was, of course, new stock additions. But if we then look at the acquisitions and what happened, so it's probably good to know that I sold AT&T, my full position, and for AT&T I replaced that with Chesnara. It's a small cap insurance company in the UK. It yields around 8%. I might have discussed it here before one time as a stock pick.
Yeah.
I also initiated a position, not a big one, in Bristol Myers because I found it quite attractive after some analysis. I initiated a small position in a new real estate investment trust, and that is Digital Reality. This is a company that I always found so expensive, and it is always expensive for a real estate investment trust. But it's in the cloud sector. It's building all these data centers that are consumed by Facebook and Google and such for effectively their data. So I still see this company growing massively over the next 5-6 years. It yields something more than 3%, I believe. I think I bought it around $150. It is expensive from a valuation point of view. but it looked for me already expensive the last 3 years, so I felt like I had to have it. And then I've been investing quite a bit in a non-dividend stock, and that's Alibaba, because as many people know that follow me longer, I allocate 10% of my portfolio more to growth stocks, but I probably shouldn't call them growth stocks in general. These are rather big tech, because we're talking here about Google and Facebook as well, as an example. So I bought Alibaba. I think the average price is probably around $218, $220 for what I bought. I bought it in three tranches.
Okay.
This is what I mainly bought, and then I reinvested some dividends. So I reinvested my dividends in Ahold, Unilever, and Shell. So I got some additional shares because on my Dutch broker I can automatically reinvest the dividends.
Okay.
If you then look at it from a dividend income point of view, this is really the one that always excites me. So April year-over-year growth was around 80%. May around 40% year-over-year growth, and June minus 13%. Now, what you typically see here is that many of the annual shareholder meetings last year were postponed from April and May to June in the midst of the pandemic. That's why this year my dividends are much higher in the first 2 months and lower in the third month. Although, on average, I grew compared to Q2 last year with 26% in my dividend income, which is a lot because my dividend income was also suffering a lot from the Shell dividend cut at the time.
Yep.
So I think it shows how much I invested last year over the summer and such, and also during the period, and it's paying its dividends literally right now. Now, last but not least, my portfolio yield dropped from 3.35% to 3.17%. That has mainly to do with having a bit overinvested in Alibaba, as an example, in the last quarter. Consumer staples is still the biggest sector with around 25 to 26%. And Microsoft keeps on growing as my largest holding, because last time it was like 7.9, now it's 8.3. This is really where the compounding is just doing all the heavy lifting. And when you look at the largest gross dividends, it's still Omega Healthcare investors, but it's others are catching up, like Ahold is coming close, Unilever is coming close. So if I would still buy one slot of one of those, they will probably dethrone Omega Healthcare as my biggest gross dividend income holding.
Hey, some good numbers there. 26% increase in dividends from last year is pretty big. Just looking at your projected annual dividend income, that was above 30%, was it? It took a little drop.
Yeah, I've been adjusting a little bit my forecasts. So it was like 31%. I have been adjusting a little bit my formulas and such, and it dropped now to 29.8%. It's not the income itself, it's more like my technical calculation that I've readjusted a little bit. I used a little bit of different inflation numbers.
Okay.
And that has an impact on my forecast.
Oh, makes sense. And the companies you have highlighted in yellow then, Ahold, they were all just reinvesting your dividends?
Yeah, those were drips. Yeah,
Okay.
dripping.
Yeah, I really wish I had that functionality on the Gyro. Did it have that on Interactive Brokers, I wonder?
I don't know. This is on Bing. The other I have on the Hero, I cannot do it. But although I sometimes do it, right? If it's an American company, I said the cost of buying shares is like half a euro. Sometimes I just reinvest that money then in a share or two.
Yeah. Okay. Are you happy overall then with your progress?
No. I'm not happy overall because I wished I bought more dividends. Just more dividend income. I wish I did. So that was a good reflection. Just it was hard for me, April, May, June, to really find some companies, because I could still buy Ahold and Unilever at the moment, but I've been buying so much of it in the first quarter that I wanted to really expand my horizon a little bit to others and not only keep on going
Yeah.
into the consumer stable, but I might go back to that in the upcoming 3 months, because from the other end, I can still increase my holdings there in consumer staple. It's not like I reached the max yet
Yeah.
here, and maybe these sectors are just a little bit undervalued at the moment, and therefore just maybe the most attractive to put my money into at the moment.
Yeah, but it also highlights what we've been saying is that like PE ratios are so high. We know valuations are so high at the moment. It is very, very hard to pick companies put your full conviction in, because we're all expecting something to pop, to burst at some
Yeah,
point. It will happen. It can't go up forever. So it's hard. Once you're investing a small bit, I wouldn't be so hard on yourself. I mean, you are buying companies like Baba that are value plays at the moment, as we say.
yeah,
So it's not as if you're sitting on your hands and doing nothing. So I
yeah.
think you're being a little bit too hard on your performance. Those numbers are pretty good. 8% portfolio growth in a quarter is
Yeah, but
pretty
that's
good.
price appreciation, and that doesn't really interest me so much. I'm proud with my dividend income. I'm happy really with my Chesnara position. It's my first small cap, high yielder, really high yield. So I'm happy with that one. Yeah, maybe you're right. It's just a feeling.
Yeah. PMA, positive mental, or was it positive mental attitude or something? Just be positive.
Yeah,
Yeah.
thank you. How about you? How did your quarter go?
Yeah, do you know what? I didn't feel like I was that busy, okay? And then I started to go through what I did, and I was buying and selling quite a bit actually. I didn't quite realize it. So I'll go through what I sold first. So I sold about 6 companies. So I sold all my Cisco shares. I sold all my Bayern shares, and that was after this whole fiasco that the lawsuits are not going away. So I just sold them straight away. I sold Flow Traders. Basically, I bought them just before the dividend because they have a huge dividend yield. The price doesn't really go too mad, so I bought them, sold them about $2, €2 higher, and was happy enough to make the dividend off them. And then I sold. When I say I sold, I was made to sell both Enegas and Ahold. Okay, and we know that I've been doing put options and stuff, and I was being a little bit too clever with these ones. So I didn't want to sell these, by the way, particularly Ahold. So I sold them. Well, I had sold puts and got assigned to sell these. And both companies, I'm not messing, just shot straight up. Whereas I didn't want to buy them straight back. I had a note in my calendar to look at Enegas because their ex-dividend date was 2 or 3 days ago. And I was in work and I got the notification and just deleted it and forgot about it until yesterday. And it was like I held them for 9 months and did not get the 9% dividend yield. So it's definitely a learning for me. I was trying to make a quick buck at the time, just selling them. I got assigned and both prices kind of got away from me. I thought Ahold might come back down. I was trying to get them around 23, but they got away from me. So I still hold. Thankfully, I didn't do it all my shares. I still hold shares in some of them, but certainly a lesson for me is to stay away from companies that I really want to keep. Don't be selling puts. A good lesson in there for me.
Don't be selling calls, you mean?
Calls, yes,
Yeah.
selling calls, 100%. Yeah.
Yeah.
So that's why I end up selling them too. I have puts in place now to try get them back, but I really don't think I'm going to get them back at a price that I want them. So we'll move on to what I bought over this quarter. So I bought some Ahold. I bought 50 shares of Ahold. I bought some Aflac, about 26 shares. Microsoft, I just buy periodically. So I bought 2 shares. I bought 100 shares of Oil Tria. I bought 47 shares of Unilever because I wanted to bring them up to 100 shares. I bought 30 shares of Vinovia because I wanted to have more shares than the kind of capitalist. No, that's not the real reason. I bought them to round them up to, I think it's like 50 shares or something. And then I bought 2 starter positions in Texas Instruments and Fresenius. Texas Instruments is one that I've been saying for ages and ages and ages. I want to buy them, and I'm just going to treat them like I do Microsoft. Just buy them every so often. I know they're expensive, but just to keep myself in the game. So my net spend was up in around what I say, what, a thousand euro a month. So I've been just consistently adding the same amount. I just didn't realize I was after spending and selling that amount over the time. So definitely happy with how it went, but a big learning with selling calls on that. So my holdings have dropped from 23 to 21 because of Energas was one, and I also sold Cisco, got rid of Cisco as well. And my top holding is now Unilever, which is 12% of my portfolio. It used to be Shell, which was eight. Shell is still up there, but because I now have 100 shares of Unilever, it changes quite fast when your portfolio is still under
Yeah.
100k, so it can change quite rapidly. The largest sector, which surprised me, is consumer staples, which is now a whopping 42%. So it's safe to say that I will not be buying any more consumer staples this year. I'll be just focusing on other areas. And my largest growth dividend has changed from flow traders to Altria, and um, that's because I pretty much sold flow traders. So if I look at my average monthly dividend, it has mm, nearly doubled from the last quarter. That's because I had flow traders, which was huge, and I bought some European companies, which we know historically pay out in between April, May, June. So lots of European companies in that. I expect this to drop over the next 3 months as I won't get dividends from them. My projected annual dividend income went up 0.04%, which is not a lot, but I mean, flow traders had a big change in that, and then obviously missing the dividend from Energas was huge. But my portfolio nearly mirrors yours, is up 8% as well, which is, I mean, I find that a good number. I have focused a little bit on option trading a little, and I'm experimenting. I'm going to keep the gyro just for my dividend stocks and use interactive brokers. But my option trading is now it kind of, well, it matched. It was about 280 months, so it matched my annual dividend for this quarter. So it's doing quite well. So putting in both, if I was to add both into my forecast, I'm sitting quite happy from where I was this time last year.
Yeah, I mean, your option trading, I see the table here. It's really impressive, EMF. I think you're really generating a lot of additional income. And if you think about it, if you reinvest this again all in your dividend stocks, it really improves the compounding, right?
Yeah,
It's
yeah.
almost like a side hustle, option trading.
You can see my figures from April, and then May and June have literally halved. And
Yeah.
the reason for that is I was choosing more high risk stocks back in April, and I was discussing this with Phil. I'm now choosing stocks that I want to own, so it's mainly dividend stocks in
Yeah.
in it. There are some companies like Carnival, for example, that I feel are depressed because
Mhm.
of coronavirus, and that will come back. So I have some companies like that, but it's mainly dividend stocks that I want to own. Like Altria, for example, was one I got assigned. I have 100 stocks, but I'm happy to keep those because
Yeah.
I like Altria. So I've changed that to just pick those type of stocks, and it's making steady income. So I'm quite happy with it.
Nice, nice, nice. So I also did some option trading, but I don't have those numbers. It's a little bit less for me, and the simple reason for that is that I don't have the bandwidth in my mind for it to keep
Yeah,
tracking them. But I'm with you. I only do it for companies that I want to own, and I put always the strike price at the price that I feel like they're also fairly valued or undervalued.
yeah, yeah. I think that's the key, and it's so easy to get greedy, and it seems so easy when markets are rising so fast. But you can see from was it March that greediness kind of kicked me a little bit, and I ended up losing money that month on it. So I kind of had to try and reevaluate and just forget about Twitter, forget about everyone, what everyone else is doing, and just here's the list of companies I want to own. This is the price I want to own them at, and I just focus on them. So
Nice.
that's how I'm going. But no, I'm quite happy with this quarter. A little bit, I said, surprised by how active I was. I didn't feel like I was that active,
Hmm.
but that was probably more so the first month of the quarter, like
Yeah.
a little bit more active than I should have been.
It's funny that you say that because that's maybe why I feel I wasn't active at all because I think I made 5 trades, yeah, and of which one was selling something. So I made 4 trades effectively
Yeah.
in almost the whole quarter. Yeah.
And do you know what makes me laugh? Because we say in this show sometimes we're buy. When I have said that I'm buy to hold for the long term, and then I look at this and I've sold Cisco full position, I've sold Intel recently, and I've sold Bayern and Flow Traders. I'm like, maybe I'm not what I think I am. Maybe I have to really think about it. But I'm happy with the purchase. I bought some, I believe, top quality companies. I mean, Aflac, Microsoft, Unilever, and Ahold were my main ones. And I initiated positions in Texas Hold'em. And I bought Fresenius after listening to yourself and Phil. I know that the prices, you said you'd like them a little bit lower, but I thought they are a top quality company. I just wanted to buy a couple of shares so they're in my portfolio so that when earnings come up or they're on my radar. So if they do drop back, I can I can get involved.
But this is totally what I do the same with initiating positions. Like I said with digital reality trust.
Mm.
Sometimes I think it's you don't need to be too greedy on your initiating position. It's
Yeah.
more like a conviction by saying, okay, you know what, I want to go in bed with you. Come closer now after this, right? That's a little bit how I look at that.
Yeah, and I have to say, Microsoft has taught me a huge lesson because I remember speaking to you about it and saying I'm waiting until 180. It's going to drop. But if I had stuck to that, I would never own any shares of them. And looking at I have a small position in, but looking at the companies that have returned the most, they are quite up there. They're nearly up there with Shell. Not in money value, but in percentage value,
Yeah.
they've grown quite a bit. So I would have missed out on some decent returns if I had sat back and wait. So that helped me going, okay, Texas Instruments, I think they're overvalued, but I should start a position. So
But which returns have you otherwise missed out on because you haven't sold them yet? So you
no,
didn't make any returns.
I didn't make any. Yeah, I didn't make any returns, but I certainly wouldn't have bought them at 250. I would have felt like
Yeah.
the gap went too high to buy them.
Why I'm saying that, I think we're really in a high valuation market, let's
Mm.
say. So what if now Microsoft will be next year at 160? How will you feel then? Because it sounds like your feeling is now associated to the price.
Yes, it is a little bit. It is a little bit because I do want to own more, and I'm still like you can see I bought 2 shares. I
Yeah,
find it really hard. Like if you look at my other purchases, I buy with conviction there. You can see that
yeah,
Unilever 47 shares, no problem.
yeah,
I I would I would love to buy a lot more shares of Microsoft. I just find it hard when they're valued so
yeah,
highly. That's
yeah,
it
yeah,
is a little bit associated to price. Yeah, you're right.
yeah. Yeah, good. Well, later maybe with the stock pick, I can also talk a little bit about that, what I mean with that.
Cool.
Okay, so okay, so what we can say, we both have some feelings around the performance, but we should both be happy with this result. I personally just hope in that Q3, I will say again, like, wow, this was a great quarter because Q1 with Ahold during January and February at those prices around 22, it was such a nice time to buy a lot of Ahold, right? So yeah, you sold some again. I mean, it's the price you pay for playing with options.
Yeah.
But from the other side, I'm sure you will get your opportunities again. I mean, we still have quite some years in front of us to buy high quality companies. So
Yeah. Yeah. Cool. So, how about we do some listener questions?
yeah, let's do that. So maybe we'll start with Phil. Surprise, surprise. Hey, what do you think is the most interesting and still undervalued sector in our industry after the COVID correction last year?
I touched on that a little bit when I mentioned Carnival and companies like that. I still see them as undervalued. Um, the travel industry as a whole has not bounced back. We were only starting to open back up, and we're starting to see this Delta variant, and this is causing concern. But I think they're massively undervalued, and there is potential there to get in on them. So that would be one industry that I'm definitely interested in.
Hmm. So for me, it is already the whole year the insurance sector in general.
Yeah,
I've undervalued is maybe the wrong word, but just probably the most attractive from a valuation point of view. And now I'm going to put also mention the most hated sector, and that's the energy sector. I think the oil and gas industry. If you are not a long term investor but more a momentum investor, let's say like that, I think you could really probably benefit in the upcoming quarters from investing a bit in still in oil stocks. I don't think they have um, appreciated as much as what the oil prices justify at the moment. Long term, I mean, there's too much risk around oil and gas, so hence why I don't want it to for me to be a big sector in my portfolio. But I think if you don't have any oil yet, I think now is still a time to buy maybe, I don't know, some Chevron or Shell or Total if you're interested in having some of those stocks in your portfolio.
yeah. I still think Shell is nicely priced. There is other companies like EOG Resources,
Mhm.
who are quite good, especially when the price of oil is rising. So I I'm tempted to add more to Shell. I have to admit, I am very tempted.
Maybe you should. Phil also had a second question. It's probably more for you. Italy or England?
Do you know what? I said my prediction was England, and I'm sticking with it. I think England's going to win. I've watched every England game. My brother-in-law is from Surrey. I watch it with him, so I'm quite pleased for him. And I found it funny the picture going around when Denmark were playing England, and it was who supports England that has one English flag, and everybody else in Europe hating on England. But I'm supporting England. I think they're going to win.
Yeah, for me, it will definitely be Italy. Not because of that, but I know Italy always has something, I don't know, sexy with it when it comes to football. There's something with it, with Italian football, that always attracts me. And when I look at England, I don't know what I'm watching at. I see 11 people, but then I see the Sterling. I wonder even how they ended up in the final. So for me, it's not a team that I enjoy watching.
Hmm.
While Italy, yeah, it has something that, and I think it would be nice if they win. And secondly, I don't need to hear for the next 30 years that football is coming home or something like that. Because if England wins now, I will, every English person I talk with for the next, as long as I live, will
Yeah,
say, "Remember 2021?"
yeah,
Oh,
that's
I
painful.
don't feel like those conversations for another 30 years.
That's painful, and I'm already getting that quite a bit from some of my friends. And that question to Kasper Schmeichel, it really
Yeah.
annoyed me. Why would you ask somebody on an opposing team about, like, just they just annoy me with that stuff? But I mean, a team as a whole, I I would disagree. I think it's a good team. Sterling is overrated, but he's so fast and lightning. He tears down defenses, but he doesn't know what to do with the ball when he gets into the final third. But I think it'll be a good game. I think England would have preferred Spain. They definitely would
Mhm.
have beaten Spain, but Italy, we know how Italy
Yeah.
go in finals. They like to win. So
I think for me, you could throw a coin and
yeah,
one of those will win. It's not
yeah,
a clear team that is better, in my
no.
opinion. Yeah.
Yeah. I was just happy with a 4-all final, and it goes to penalties. That's all I want.
Exactly. Exactly. Okay, so let's go to the next question from Tony. Thanks, Tony. And he says, sometimes the change in your environment enlightens some ideas up. So, to you, AMF, did the time off give you some inspiration on any dividend investing ideas, or were you too busy drinking? beer.
Let's just say Diageo owe me a lot. No, I mentioned to you off air just beforehand. I spent all of last week. I didn't have a phone much. I wasn't active on Twitter. I didn't even bring a laptop. I shut off from work. I shut off from everything that I normally do day to day, including dividend investing for the whole time. Went walking with family members that don't have any interest in any of this stuff. So naturally, we didn't talk about it. Spending lots of time with the kids, who I'm also not going to talk to about it. And I didn't actually have a lot of free time to myself. So just lots of time with family. I'm always quite busy, so I enjoyed every single moment of it. And I'm back into the swing of it now. So I will start writing down my ideas pretty soon.
Cool, cool. So, I mean, that means you need another holiday, I would say.
I need a holiday to myself where I can sit there and think and relax for a bit. But uh, hey, can't be too greedy.
So let's go to Interest Compuesto, and he has a question about Alibaba. He is asking, is this a historical opportunity or a value trap? And do you think there is a bit of I miss the historical returns of Amazon, and Baba will be the next Amazon, and I want to be in within the retail investor community? So maybe I'll answer this question because it is. I mentioned I purchased some Alibaba this quarter. Actually, when I saw the question, I thought like, he might be right. Yeah, this is what I have a little bit with Baba, that I do see it as an Amazon, and I do have a feeling that the price is mispriced due to, for instance, Chinese fear and the control of the Chinese government. And I do see it indeed as an Amazon, and I do have a hope maybe or an expectation that it will give similar historical returns again going forward. So to be really honest, yeah, interest compuesto, I believe you might be right. Yeah, I think it's definitely, now that you say it, something that I had in my mind probably unconsciously when I was looking at and when I'm thinking about Alibaba. Again, it's part of my growth part of the portfolio. It's not meant to be a long-term holding. I might buy it, sell it after a year or so. Although I struggle with that. So yeah, you're probably right.
Okay. The next question is related to that, and it's probably more for me, which is from Enzo, also around Baba. So it kind of ties in together. But he said, with all-time stocks prices, you didn't contemplate the idea of buying some cheap growth stocks like Baba or similar companies. I don't have the same feeling as you have about Baba. I really don't think they're in the same breadth as Amazon, and I do certainly have the Chinese fear. I do. Dividend Dane posted something in our group about the Chinese government looking to close the loophole to delist every single US ADR listing. Okay, and I believe this is a real threat, and it's because of this is why they're priced so cheaply. I don't think they'll ever get to the same level of Amazon or Apple. I could be wrong. I hope I'm wrong for people like you or who have invested in them, but I don't know these companies. I don't want to know anything about Baba. I don't know how to price them. If I bought them, I'd be purely buying them on FOMO. I would not know when to sell them. I just have no interest in even looking them at the moment. So if they were an American company, I probably would feel differently, hands up. But because they're Chinese, I don't want to touch them at the moment.
Yeah, so my valuation has it around $300, and that's where I have put my sell thinking around this company. And around the Chinese government, I mean, I read today about Biden that he is giving 72 directions to the Federal Trade Commission in America, effectively to, as a first attempt to start breaking up big tech. And then I wonder always, like, okay, so we're scared of China because of the unknown. It almost sounds like xenophobia sometimes. But then I see what in America, I wonder, like, so what's really the difference here? Maybe the Chinese government is a little bit more, I said, maybe better in execution of their policies compared to American government.
There's a saying in Ireland, maybe you have it as well. It's called "Better the devil you know." I'm not saying I'm not saying America or Europe by
Yeah.
any means are angels, but at least the information on them is a little bit more easier to come by. Yeah, I mean, China's just a black hole sometimes. You don't know whether what you believe is right or wrong. Um, so I prefer to stick to something that I
Mm,
think I know better. And maybe I don't, but something that I feel more
yeah.
comfortable in. And China is just one of those places, and Russia would be another that I would not be comfortable in investing for the
Yeah,
long term.
I understand what you're saying. Okay. Hey, then the last question is from Alan, and he is asking if you need to completely quit a sector, which of your current sectors will you quit?
Oh, that's a good question. Well, I tell you which one it wouldn't be, which is consumer staples, considering it's 42% of my portfolio. I'm not. I mean, I don't have much consumer discretionary or materials. If I was to drop any, probably industrials, maybe, but I don't know. That's a hard question. I don't know which one.
So I take this. I don't know what the name is, but I take this from the 11 sectors that we have,
Yeah,
and I was doubting between consumer discretionary because it has all the cyclicals in there as well,
yeah,
or utilities. And when I think about it, I will probably go more for utilities. I would keep finance because of the insurance industry in there. And utilities, I don't think I have anything really in my portfolio. Maybe Enagas, but I don't think even it qualifies as a utility. Not sure even, but probably I would have utilities out of it just because of the fact that I'm never really interested in them.
that's that's an interesting one. Utilities are usually stable. There's obviously pressures from governments, but you generally know what you're going to get with them, and predictability is something I would like. So I'd find it hard to drop utilities compared to financials, for example.
Yeah, yeah. So financials has insurance again in it, and if I think about selling Munich RE, or for instance a utility in Europe, I would never sell Munich RE from that point of view.
Yeah,
So, but hey, I don't want to sell any of the 11 sectors or completely quit. So this is really an academic discussion from that point of view.
yeah, yeah. It's a good question to make you think, but uh, looking at my portfolio, I definitely need to start looking at some consumer discretionary and materials because I have zero exposure. So I need to get something on the board.
Yeah. Okay, so thank you for all your questions. It is always a pleasure to answer them. But I think we'll also go now to the last section, and usually also one of the favorite sections for the listeners, and that's the stock pick of the week. Well, it should not come as a surprise, probably, for people that follow me on social media, because I posted the other day my watch list, and one of the companies on there is Koninklijke Philips. Full disclosure, I bought this week some Koninklijke Philips. I initiated a position in it. I find it at the moment at fair value. So it dropped from around 50 euros to 40 euros now. There was a recall for respiratory respirators, I think, these devices, this equipment.
Yeah,
It will have a 250 million impact to their earnings, but company is not changing guidance, and that's for me usually quite a bullish signal. That means that they can absorb these numbers in their forecast, which means that probably their forecast, their real numbers would have been higher. Now, why did I buy Philips? I definitely don't think it's undervalued. The yield is currently, with the current price of 39 euros, around 2.2%. If you look at their historical dividend growth performance over the last 2 years, it isn't even 2% annualized. But here it's really about, do you believe in the company going forward as a full dedicated medical technology company like Medtronics? Because the last 10 years it has been spinning off all their businesses, trying to keep the head above water while they were doing that, without cutting the dividends. But it was a really, really tough decade. But now they have cleared up everything here, and for me, it's now a blue ocean for them to grow in the medtech space. So this is why I'm bullish on Philips. However, it is a company that I need to monitor closely over the upcoming few years, because it's all about is is the company able to execute? Yeah, if they are not able to execute on the strategy, then the current price is too much. So because the my valuation of 39 euro assumes higher growth rates than what they have shown over the last few years, and those assumptions are in line with what management is forecasting.
Okay. Yeah, no, certainly a good choice. Did you write an article on them before? Uh,
Yeah,
yeah. Okay.
yeah.
We'll link to that below. 'Cause, good company. We know that they've spun off a lot of different businesses. They're not your TV brand anymore. So quite an interesting company, and one that, as you say, if they can execute, will be good for the long term. So no, thank you for that. I was laughing when you were saying Clonic Kick. I can't even say Clonic Kilkie, or I can just
Koninklijke.
I
Yeah.
can just see Russ from Dapper Dividends releasing another video just so he can say that 100 times on the video.
Yes, indeed.
So hey, so that's it. That's the end of the show. As always, it's flown by. Um, Interesting to hear your thoughts, particularly on Baba and your portfolio. But it's been we can all agree it's been a good quarter.
Yeah, definitely. And hey, it was really great having you back again. I missed you a bit, I must confess. And yeah, also for the listeners that stuck to here till the end of the show, you guys are diehards. Really appreciate it. It's for us an honor to share our thoughts with you. And yeah, having said that all, see you next week again at the next Dividend Talk.
Have a nice weekend.